It seems like every time we blink, the market's either taking off or bracing for a crash.
Yeah.
These swings are getting to be the norm.
I know.
And trade policy, it often feels like it's right there at the heart of it all.
Mm-hmm.
So today in this deep dive, we're going to really unpack the latest developments with President Trump's big Liberation Day,
Right.
which was supposed to be April 2nd,
Yeah.
and specifically how the market reacted when it seemed like things might actually change.
Yeah, this is a big one for sure.
For anyone out there who's, keeping an eye on their investments or just trying to understand, what's happening in the economy,
For sure.
these shifts in trade policy can make a huge difference.
A huge difference, and they can happen really fast.
Exactly. We know you don't have all day to wade through mountains of articles and reports.
Right.
So think of this as your shortcut to understanding what happened at this really specific moment in time.
Yeah.
We've come through all the key articles from CNN, Reuters, Yahoo Finance, and then we also got our hands on a really detailed briefing document.
Wow.
We pulled out all the essential points so you don't have to.
Very nice.
All right, so our mission here is pretty clear.
Lay it on me.
What were these reciprocal tariffs supposed to be?
Yeah.
What changed? Why did the market react the way it did?
Good question.
And ultimately, what does this whole episode tell us about how trade policy and market sentiment are so closely tied together?
Yeah. Let's get into it.
Okay, so let's rewind a bit leading up to April 2nd, which President Trump had been calling Liberation Day.
Ah, yes. Liberation Day.
His rhetoric had been very consistent. He kept talking about these widespread reciprocal tariffs. Now, for anyone who might not be familiar with that term,
Sure.
basically it means if another country decides to slap a tax on something coming from the U.S.,
Right.
let's say they put a 10% tax on our goods.
Okay.
We would then turn around and impose similar 10% tax on their goods coming into our market.
Tit for tat.
Exactly. The idea in theory is to even the playing field. But here's the thing. This wasn't just about some minor adjustments.
No.
We were also looking at the potential return of those 25% tariffs on all goods coming from Mexico and Canada.
Oh, yeah. Those were a big deal.
I think people might remember earlier in March, there was a lot of disruption when those were briefly in place.
Definitely.
They were put on hold, but there was this big question mark hanging over everything.
Mm-hmm.
What would happen next? Would they come back? Would they stay gone?
Yeah. A lot of uncertainty.
So basically, people were bracing for some potentially huge obstacles to trade, even with our closest neighbors.
It was a big deal. And, you know,
and then
it wasn't just about Mexico and Canada either.
Oh, absolutely. It wasn't just about those two. This was about a whole range of industries that could have been affected.
It was a big range.
Well,
I mean, you had cars,
well,
pharmaceuticals, the microchip industry, copper lumber.
Oh, yeah. The microchip industry especially.
Especially, yeah, that's a critical one.
I mean, the administration was really signaling that they were ready to tackle what they saw as unfair trade practices, and they were willing to do it across the board.
Yeah, they were making a statement.
But then things took an interesting turn.
Oh, yeah. Tell me about it.
Around Friday, March 21st,
Okay.
President Trump said a few things that really made people stop and pay attention. He started talking about flexibility when it came to these tariffs.
Flexibility.
Yeah, and that was a pretty noticeable shift because before that,
Right.
the message had been very clear. No exceptions, no special treatment. So this was the first real hint that maybe things wouldn't be quite as rigid as everyone thought.
Right. And you have to think the market had been getting pretty jittery about all this.
Oh, yeah.
So any sign that maybe the approach wouldn't be so harsh,
Yeah.
well, people were bound to feel at least a little bit relieved.
Definitely. And that relief started to show up in a big way.
How so?
Over that weekend, reports started coming out from the Wall Street Journal and Bloomberg News, suggesting that maybe April 2nd wouldn't be the all-out tariff storm that everyone had been expecting.
Interesting.
These reports were saying that the tariffs announced on that day might actually be more limited, at least initially,
Okay.
and then maybe more would come later.
So a phased approach.
Yeah, and what really stood out was the suggestion that those specific tariffs on things like cars and pharmaceuticals,
Right, right.
those might not be part of that first announcement.
Interesting.
So that was a big development.
It was like a narrowing of the scope,
Yeah.
moving away from this kind of blanket approach
Yeah.
and going towards something more, targeted and specific.
Right, and that shift actually ties directly into Treasury Secretary Scott Bessent's idea of the Dirty 15.
Oh, yeah, the Dirty 15.
So what's the story with the Dirty 15?
Well, Secretary Bessent used this term to describe a group of about 15 countries
Okay.
that the U.S. sees as consistently engaging in unfair trade practices. And after he made those comments, the Wall Street Journal actually published a list of countries that they thought might be included.
Oh, wow.
So we're talking about countries like Australia, Brazil, Canada, China.
Whoa, okay. Big players.
Big players. The EU, India, Japan, South Korea, Mexico, Russia, Vietnam.
Wow, that's quite a lineup.
Yeah, it is. And the thing about the Dirty 15 isn't just the names on the list.
Right.
It's the implication that the administration is maybe shifting gears.
Okay.
Moving away from this broad approach.
Sure.
And going after specific countries where they see these imbalances.
I see. So it's more like a strategic...
Yeah, strategic.
I mean, if it's still going to be, contentious.
Oh, yeah, for sure.
So basically, instead of tariffs impacting almost everyone,
right,
the focus was shifting towards these maybe 12 or so specific countries.
Yeah, about a dozen, give or take.
That's a pretty big scale back from what they were initially talking about.
It is a significant reduction for sure.
And the market's reaction on Monday, March 24th, it really showed just how sensitive everyone was to this change.
It did.
After those reports over the weekend that maybe the tariffs wouldn't be as bad as everyone thought,
right,
stock futures jumped.
They did.
Now, when we say stock futures jump, that's basically the market predicting where stocks are going to be when trading actually opens.
Right.
So it gives us a really immediate look at how investors are feeling.
A real-time snapshot.
Exactly. And the numbers were pretty impressive. Dow futures were up between 0.9% and 1%.
Okay.
That translates to a gain of 350 to 437 points.
Wow.
S&P 500 futures, those rose by 1.1 to 1.2%. And then the Nasdaq 100 futures, which are really heavily influenced by tech stocks, those climbed by 1.3 to 1.6%.
They led the way.
They did, and even specific companies like Tesla, Meta, NVIDIA.
Those are big names.
Big names, they tend to be really sensitive to any kind of trade news.
For sure.
They were all showing solid gains in pre-market trading.
It really goes to show how much those tariffs had been weighing on everyone.
Yeah.
The fear was that these huge sweeping tariffs were just around the corner. So any indication that maybe that wasn't going to happen?
Yeah.
Well, it makes sense that people would breathe a sigh of relief.
Exactly. It wasn't even just about the tariffs themselves. It was the uncertainty around them that was really causing so much anxiety.
Uncertainty is a killer.
It really is. Any signal that maybe things were becoming a little more predictable, even if the underlying policy was still tough, it was enough to create a positive response.
Makes sense.
And then you also had analysts weighing in on all of this.
Oh, yeah. What were they saying?
So Tobin Marcus over at Wolfe Research, he pointed out that by leaving out those sectoral tariffs from the initial April 2nd announcement, the overall impact on the economy could actually be a lot less severe.
So a more measured impact.
Yeah, exactly.
Yeah.
And by focusing on fewer sectors right away, it would give the economy a little more time to adjust and potentially prevent that kind of immediate panic in the market.
Right.
Now, remember, those sector-specific tariffs, they can really disrupt specific industries.
Yeah, for sure.
Think about what would happen if there was a tariff on imported car parts.
Right.
That would hit car manufacturers hard.
Huge impact.
And then ultimately that cost would trickle down to consumers.
Exactly.
So by leaving those out of the initial announcement, it's understandable why those sectors in the market overall would see that as a good thing.
Makes sense.
Then you had Michael Kontrowitz from Piper Sandler.
Okay.
He made the point that having clarity on tariffs,
it's
absolutely crucial for the market to recover in any kind of sustainable way.
It's huge.
He was saying that all this uncertainty around trade policy, that had been a major factor in the recent sell-off.
Yeah, because uncertainty breeds fear.
Oh, absolutely.
And fear drives people away.
And when you're talking about the market, uncertainty can be really damaging.
It shakes confidence.
Yeah.
Businesses have trouble making long-term plans.
Right.
Investors get nervous and start pulling back.
Yeah.
And then the market gets more and more volatile.
So his point was, even if the actual policy itself isn't ideal, sometimes having that certainty, even knowing that it's going to be tough, it can be better than just waiting and wondering what's going to happen.
It's true, because then at least businesses and investors can make informed decisions.
Absolutely. They can adapt and plan accordingly.
That's the key.
Then we had Tom Lee from Fundstrat.
Oh.
He was actually pretty optimistic.
Oh, yeah.
He said that as these worries about a trade war started to ease up, it could pave the way for a broader market rally.
Interesting. So he was seeing a potential upside.
Yeah, and his view really shows how everything in the market is interconnected.
Oh, yeah?
When you have a big potential problem, like a trade war looming over everything, and then that threat starts to fade, it can open up space for other positive things to happen.
Right. And those positive things can then push the market higher.
Exactly. It's like removing a big obstacle.
Exactly.
But let's take a step back for a second.
Okay.
Because it's important to remember why investors were so worried about these tariffs in the first place.
Yeah, good point.
It wasn't just about the tariffs themselves, right?
No, it was bigger than that.
What were the bigger concerns?
Well, the main thing was the possibility of a full-blown trade war.
Oh, yeah.
Which could mean huge disruptions to global supply chains.
Right.
Increased costs for businesses and consumers. And basically a drag on economic growth.
Yeah.
Not just in the U.S., but worldwide.
And then on top of that, there were concerns about how these tariffs might affect consumer sentiment.
Yeah, consumer confidence is huge.
It is. If prices on everyday goods start to go up because of tariffs, that can lead to people spending less.
Less spending.
And consumer spending.
Yeah.
That's a major driver of the U.S. economy.
Yes.
Now, Federal Reserve Chair Jerome Powell, he tried to offer some reassurance.
Oh, okay. How so?
He said that he thought any negative economic impact from tariffs would probably be temporary.
Interesting.
And his statement likely calmed some nerves.
Yeah, the Fed's opinion carries a lot of weight.
It does.
So for him to say that any damage would be short-lived,
right,
that probably helped ease some of the more extreme fears.
Definitely. And while all this policy stuff was going on, there were also some interesting developments on the diplomatic front.
Really?
The EU, Mexico, and Canada, they all decided to postpone their retaliatory tariffs while trade talks continued.
So they were keeping the door open for negotiation.
Yeah, and those postponements suggested that even with all the tension and the strong rhetoric, there was still some willingness to talk things through.
Right, to find a way to avoid escalating the situation.
Exactly. And that probably contributed to the more positive mood in the market.
It makes sense.
But, this whole situation, it really highlights a pattern that we've seen before.
I was just thinking that.
This wasn't the first time President Trump has announced big changes to trade policy.
No, not at all.
And then had those plans, change, get delayed or adjusted later on.
Yeah.
Think back to those early days in his administration when he first started talking about tariffs.
Right.
Those initial promises of widespread tariffs.
Yeah.
They didn't really materialize the way people expected. And then there were all those negotiations with Canada and Mexico.
Right.
Remember all the back and forth?
The delays?
The delays.
Yeah.
It went on and on. And then earlier this year, we had that whole issue with the de minimis exclusion.
Yeah, the duty-free threshold.
For goods coming from China.
China, yeah, that was a roller coaster.
It really was. It was like they eliminated it.
Right.
And then brought it back.
Yeah, it was confusing.
And all of this creates uncertainty in itself.
It does.
And as we saw with how the market reacted to this latest news, this kind of uncertainty, this back and forth, it's really tough on businesses.
It is.
It makes the financial markets more volatile.
For sure.
It confuses consumers who are trying to figure out if prices are going to go up or down.
Yeah, no one knows what to expect.
And it makes it really hard for businesses to plan for the future.
Right, because they need to make decisions about where to get their materials.
Exactly.
Where to set up production. How to price their goods and services.
It's a lot to juggle.
It is.
So when the rules of the game keep changing, it makes it really hard to play.
It really does.
So as we wrap up this deep dive, I think the main takeaway here is that the market, it responded really positively.
Yeah.
Almost like with a sense of relief.
I get it.
When it looked like the tariffs might not be as aggressive as people had feared.
Yeah.
And that just shows how powerful uncertainty can be.
It's huge.
Especially when it comes to trade policy.
Absolutely.
I mean, everyone was so worried about those broad punitive tariffs. And then even just the suggestion that maybe there would be a more targeted, more flexible strategy, even without all the details ironed out.
Right.
It was enough to trigger a really strong positive reaction.
The market likes predictability.
It does.
Even if what's predictable isn't necessarily good news.
Sometimes just knowing what to expect is enough.
Yeah.
But of course, as we're talking right now, it's still March 24th. We're still heading towards the April 2nd announcement.
That's right.
And as we've seen, things can change a lot between now and then.
Oh, they can change in a heartbeat.
Absolutely.
Yeah.
So this whole situation, it really makes me think
about
we've seen this pattern of announcements and delays and potential changes in approach. What does that tell us about how difficult it is to actually put these big trade policy changes into action?
That's a great question.
And also how sensitive global markets are to even the possibility of those changes.
Yeah, that's an important point to consider.
It really is.
It's like the market is constantly on edge.
Yeah, waiting to see what's going to happen next.
Trying to anticipate the next move.
Definitely something to keep in mind as we get closer to April 2nd. I'd say keep an eye on the news.
Absolutely.
See how the reality of those announcements compares to all the speculation that's been going on.
I think that's a good idea.
Because ultimately, understanding how the market reacts to all of this, it gives us a window into how connected everything really is.
Yeah.
Global trade investment. The ripple effects of even just proposed changes.
Right.
They can be huge.
They can be massive, and they can happen really fast.
It's a fascinating but complex landscape.
It is.
Well, thanks for taking this deep dive with us.
It's been my pleasure.
We'll definitely be keeping an eye on these developments, and we'll bring you more insights as things unfold.
Sounds good.
Until then, stay informed, and thanks for listening.
Take care.